Have you ever wondered if there are hidden signals in the stock market that can predict huge potential moves before they happen? In this video, I'm going to show you how to capitalize on those huge potential wins using a real-life example. This will help you see how you can potentially use options to realize tremendous gains on hidden opportunities. My name is Randy Perez. I'm a 20-plus year stock and option trader. I'm excited to share this option trading strategy with you. Let's take a look at a real-life example and ticker symbol CBOE and talk through a hidden signal in the stock's fundamental and technical analysis that revealed a potential huge win. In this case, an over 500% win. Let's first talk through the fundamental and technical situation of CBOE when we first entered this trade. Now, going back several years to May 2nd of 2022. As you see here, at that point, CBOE is trading for around $112 per share. First, let's talk about the fundamentals. As you see in the note that I made for you here, on this day, CBOE was trading for around a 17.5 P to E. When I researched its long-term average, it had long-term traded for around a 23 P to E. That told me from a fundamental standpoint, using that one metric, CBOE appeared to be very undervalued. I checked multiple other metrics and they all agreed that CBOE was potentially extremely undervalued at this point. Now, the daily chart didn't look exceptionally strong to me, and here's why. Notice that it had recently been making lower highs and it had also been making lower lows. So from a technical standpoint on the daily chart, it didn't look that great. However, I checked more than just a daily chart when I'm looking to enter a long-term position. Now I've switched to the weekly chart of CBOE the week that we did this trade. Here you see that from a technical standpoint, it looked a little bit better. It experienced a nice advance, and recently it had come down. It was finding support right above the red 200 moving average on this weekly chart. Notice that area corresponded to an area where it found resistance right here in March of 2021. So it was an area that I thought could potentially serve as support for it. And since this was possibly a longer term trade, I also checked the monthly chart, and here's what I saw. I saw that overall CBOE appeared to be in a nice uptrend. It had recently made a higher high several months back, and although it had made a lower low about a year and a half before that, it was approaching an area that I expected to find support right around the green 50 moving average. As we see, that's what happened about a year or two before that. Now, it did break below that area, but eventually that approximate area served as support for it. So I realized that if CBOE were to come down, it quite possibly might be below that green 50 moving average. This will probably be a general area where it could serve as support for it. So although the longer term technicals looked okay, the real reason why I entered this trade were the fundamentals. As you see, it appeared to be trading at a very big discount compared to its historic values. So I believe that long term, the market would realize that CBOE was undervalued and I have a potential winner here. I just didn't know how long that would take. So if this position, I entered a long position by actually buying the stock. But this video is about options. So I'm going to show you how you could have used this same setup using options to produce a phenomenal 500+% return. First, I'm going to show you the trade you could have done using options on this exact day. After that, I'm going to show you two more possible days you could have entered this trade, yielded the same return, and been in the trade a lot less time. So here's the option trade you could have done. Now, we're going back to the day that I bought this stock, which is May 2nd of 2022. And notice what we're doing here. This section up here is the calls. We're buying one call option. Of course, if you're willing to risk more, you could buy more than one, but in this scenario, we're going to buy one call option. That's the equivalent of controlling 100 shares. And here you see the chart of CBOE. Notice they recently made a new lower low on this chart. This is the daily chart here. So notice the expiration that we're buying. We're buying the January 19th of 2024 call option. So you see here that option expires in 627 days. So just under 2 years from when we bought the option. Notice the midpoint of that option was at $5.65 per share. So as you see in the bottom left corner after paying commission, this position cost us $566.45. So that's all that we had at risk. And that's one nice thing about using call options in a position like this. So if the position goes against you, all you're going to lose is that $566. As compared to if you own the stock, well, the stock went to zero, you could lose $111 per share for that position. But for controlling those same 100 shares, you're only risking $566. And just keep in mind that position goes against you or doesn't go your way fast enough, well, you will indeed lose that money. Notice the strike price that we sold up here in the top right. We sold the 150 strike price. And remember that CBOE is trading for just under $112 per share. So we're buying an out of the money call option because we're using some leverage here to get a potential high return. Now we ended up being in this position right up until expiration, which is right at 600 days later. But let me show you two other possible entry days before I show you the results of this option trade. Now remember, we entered this trade back on May 2nd of 2022. And from a price action standpoint, we entered almost at the perfect time. Notice over the next several weeks, CBOE did drop a little bit, but then it began its slow climb. But notice that we were in this position for quite a long time before my next possible entry date. In fact, as you see here, it wasn't until March 30th of the next year that I showed another possible entry date I want to mention to you. Now, why did I say this might be a better entry date? Well, first of all, it had broken through some previous resistance. But what resistance was that? As I zoom out here, you see it was some really strong resistance from about a month or so before that, then also from back in 2021. But there's even another possible intriguing entry point I want to share with you. That other possible entry date was 7 months later on July 14th. So our entry just traded about 10 months later than what I personally did. Let me tell you why this might be an interesting entry date. Notice what happened on the candlestick the day before. It broke out above an area that has served as resistance for it. But this wasn't just any old resistance. And now I've zoomed way out here. And that day corresponded to resistance it had found way back over here in August of 2021. So as I zoom in here, you see it broke through that resistance, or it broke through its all-time highs the day before. Once it did that and the candlestick closed out, you might then feel confident that it's about to make another nice strong advance. And that's exactly what happened. So I shared with you 3 possible entry days. The first is the one that I did, which is around the bottom of the market. If you're buying the stock, that's probably the one you want to do. And for me, that was just based mainly on fundamentals, but also on the weekly and monthly charts. But if you're buying options, you want to be in that position as short a time frame as possible, because time decay will eat away at the value of your option. So that's why I share with you these 2 other possible entry points. I'm going to show you 3 snapshots here. The first one is if you bought the call option on the same day that we bought the stock. The second one is those other 2 possible entries. Just pay attention to the P&L of this call option on those other 2 entries. Here's the P&L graph of this position if we bought the call option on the day that I bought the stock. As you see here, we're about at a break even. We're just at a little bit of a loss because of commission. But notice the profit and loss here. We could at most lose $565 plus commission, but our win could get really big. If CBOE had a nice advance, we had the potential to win thousands of dollars on this trade. Here's the first potential alternative entry day that I mentioned to you. This is when it had just broken through some resistance. So this is March 30th of 2023. Remember, we entered our position about a year earlier in May of 2022. But notice that over that time frame, because theta had eaten away the value of the call option we bought, this position was actually down $126. That's why I say it might have been better if you waited, because theta ate away at the value of this position. But when you buy a call option, you're buying a longer term call option, that's just kind of the risk you take. So far, the position's down. It's only worth $440. We paid $566. But what about that second possible entry date? The one when it broke through all-time highs. What did this call option look like at that point? Remember, here's what the chart looked like. It was July 14th of 23. Now, one thing I want to make sure you understand about these alternative entry points is that from a fundamental standpoint, they weren't as good. As you see here, back on May 2nd of 2022, when we bought this stock, it was trading at a lot bigger discount than it was about a year later in March 30th of 2023, and also July 14th of 23. And so when we bought the stock, it was trading for around a 17.5 P to E. If you fast forward to the next year, March 30th of 23, as I zoom in here, you see it was trading for about an 18.79 P to E. And then several months later, it was up to a 19.15 P to E. So still trading at a discount because its average was 23 over the previous years, but not nearly as big of a discount as when I bought the stock outright. However, the reason why I'm showing you different optimal entry points is because you're buying a call option. When you buy a call option, that theta or time decay works against you. So even though during this time frame the stock was up really good, remember when we entered it, it was trading for around $112 per share. On this date in July, it was trading for about $140. So it's up around $30 per share. But the problem is that theta had eaten away at the value of this call option. So although the position was up really good, in fact around 30%, the call option was down a little bit. It was down about 10%, or about $56. But I want to show these other 2 possible entry dates because it would have meant that you were in this position for a lot shorter amount of time, and that's important when you're buying options. So what would have happened if you had bought this call option on the date that I bought the stock? Where here you see a chart of CBOE during that whole time frame. Where this little green dot is, that's the day we bought, and this is the day that we exited. This is showing what would have happened if we had held this call option expiration. Notice there's only 1 day left on this call option that we bought. So the number of days in this trade was 627. The stock had a nice advance because the market realized that CBOE was undervalued, just like we believed it was, and notice the result on this call option. Remember, it cost us $566.45 to buy this call option, including commission, and if we held it through that date, through the expiration date of this call option, it would have produced a $3,223 profit, or 533% return on what we had at risk, the $566. So a really, really nice return on what you had at risk, and a fundamentally very undervalued companies whose technicals look primed to take off, and that's exactly what happened. The only problem someone might have is that we're in this trade for quite a while. With the stock that we bought, we're in it for just under 2 years. And with the call options, you could be in it for that same time frame or a little bit less if you bought one of the later dates. But overall, you are in this trade for quite a while, but notice the return. If you bought the option, it was over a 500% return. How do you find these potential explosive growth opportunities? Well, I'm going to talk through how to find them using the same stock, CBOE. And one reason is that this stock to me is no longer undervalued. In fact, I believe it's overvalued at this point. But here's one way you can find these potential opportunities. Of course, you want to have a nice list of stocks that you're always tracking, and CBOE is one of about 250 that I track on a daily basis, looking for potential opportunities to buy them outright when I believe they're undervalued, or sell options in them when I believe they're undervalued or fairly valued, but the technicals look prime for a neutral or bullish position. So how do you find these opportunities? One thing I look for is their current valuation. This website I'm going to share with you is Seeking Alpha. If I'd like to give Seeking Alpha a test run after what I'm about to show you, I'll leave a link for you down in the description below. It gives you a free 7-day trial. It also gives you a discount if you go ahead and buy it at the end of that 7 days. So how can you use a website like Seeking Alpha to potentially find these explosive opportunities? Well, one thing you're looking for is where it's trading at fundamentally compared to its history. Now, Seeking Alpha has a nice column here that compares its 5-year average to its current price to earnings, or its current metric, whichever one you're looking at. In this situation, we're going to look at price to earnings. So notice that currently CBOE's 5-year average for the PDE non-GAAP is at 20.5. The problem, as you see here, is currently trading for 24.73. So right now it's trading for about 20% more than what its average says it should be. Now I don't just look at the 5-year average, I look at the 10, 15, 20 plus year averages. This is a nice place to start, because if it's trading under its average, and if it's trading well under its average, that might signal you to do some more research, because this might be a potential opportunity. And here you see an example of that. This stock is ticker symbol GPN, or Global Payments Inc. And notice that GPN's 5-year average on that same metric, the PDE non-GAAP, it's at 19.29. And notice what it's currently trading at, 10.14. As a result, it's saying it's trading for about 47% less of a PDE than its 5-year average. So this might signal you that it's worth spending some time to do a little more research on GPN. Is the market justified in discounting it this much? Or after doing your research, do you find that the company actually is fundamentally solid? Maybe it's working through some challenges, or maybe the market's just discounting them for some unknown reason. And if you find there's nothing really wrong with the company, the market's just applying a big discount to it, then you might consider buying some outright. Or if you're okay with it, buy a call option like I shared in this example. So look for companies that are trading under their long-term fundamental values. Look at other types of valuation, for example, their sales, and even down here as you see their cash flow. Generally I look at about 7 different metrics, but these are nice ones to look at to see if a company is potentially undervalued and primed for an explosive move. Finding potentially undervalued companies, or those that are trading at interesting technical setups, can take a lot of time. If you'd like to get a little help with finding some potential ideas, check out the benefits of becoming a patron down at the link in the description below. Every weekend, my patrons get a list of companies that I believe look interesting from a technical standpoint, and then at the bottom of that technical list, they get a list of companies that I believe are potentially undervalued. This will give you a list that you can work off of to see if you agree, if you believe they too are undervalued. And if they are, if you find that they are potentially undervalued, you can either buy the stock outright or buy call options like I share with you in this video. To see more of my favorite option trading tips, check out the video list, the link above, and description below entitled Trade Options Like a Pro. Until next time, happy investing, and we'll see you again soon.